What is going on, everybody? Welcome back to Trading Learning 101. Today's video, we're going to talk about Fibonacci clusters. I'm excited to show you guys this trading style of technical analysis. I don't hear many people at all talking about Fibonacci clusters, and how I learned about Fibonacci clusters is through Carolyn Borden and her book Fibonacci Trading. If you're new to the channel, be sure to hit that subscribe button, join the Trading Learning 101 community where we all grow as traders and investors. And if you're interested in more Fibonacci videos, be sure to check out the Fibonacci playlist I've created. I will leave a link to that playlist down in this video description below. I put a lot of hard work into this Fibonacci playlist, and I hope you are all able to learn as much as you can about the fabulous world of Fibonacci and apply it to your everyday trading and your investment strategies. So without further delay, let's jump into the video, everybody. Alright, if you're a regular on this channel, you already know we're going to bring up Investopedia. We're going to read what are Fibonacci clusters, show you and tell you all what Fibonacci clusters are, how to use them, the definition pretty much. And if you haven't heard about Investopedia before, it is like the dictionary for the stock market. I use it all the time. You can just learn so much from Investopedia. I highly recommend this website. What are Fibonacci clusters? Fibonacci clusters are a tool used in technical analysis that combines various numbers of Fibonacci retracements, all of which are drawn from different highs and lows. Fibonacci clusters are indicators which are usually found on the side of a price chart and look like a series of horizontal bars with various degrees of shading. Each retracement level that overlaps with another makes the horizontal bar on the side darker at the price level. The most significant levels of support and resistance are found where the Fibonacci clusters is the darkest. So when drawing Fibonacci clusters, they're supposed to overlap each other. And what you want to look for with all the different Fibonacci retracements and projections that you draw on the chart, from swing lows to swing highs or swing highs to swing lows, you want to see which price areas have the most horizontal lines at a specific price area. We're going to go over many chart examples. Don't worry, I'm going to break it down so you will all understand what Fibonacci clusters are and how to use them. Breaking down Fibonacci clusters. This is a useful tool to gauge the relative strength of the support or resistance of various price levels in one quick glance. Traders often pay close attention to the volume around the identified levels to confirm the strength of the support and resistance. So when you have all those lines at a specific price area, traders will often look at the volume as well to confirm if that is a big resistance or support area. As the name implies, the general strategy behind the Fibonacci clusters is to find where traders are concentrating the most. It's where we'd expect the greatest level of price clustering, where results are empirically mixed as to where the Fibonacci clusters have predicted value. They do show promise and signal high probability market reversals. Origin of Fibonacci clusters. The Fibonacci clusters get their name from the Italian Leonardo Pisani Fibonacci, who picked up the ancient Indian system of 9 symbols of some other mathematical skills that would later become instrumental in development of the Fibonacci numbers and lines. The Fibonacci studies are popular trading tools. Understanding how they are used and what extent they can be trusted is important to any trader who wants to benefit from the ancient mathematicians' scientific legacy. While it's no secret that some traders unquestionably rely on Fibonacci tools to make major trading decisions, others see Fibonacci studies as exotic scientific valuables, toyed with by so many traders that they may have influenced the market. We offer a deeper breakdown of Fibonacci and his numbers here. If you're interested in reading more on this blog post, I will leave a link to it down in this video description below. Feel free to check it out. Alright, so let's get into first how to draw Fibonacci clusters. What I'm going to do first is I'm going to delete all of these that I've drawn, and we're going to start from fresh. We're looking at a 10-minute time frame on ticker symbol CODX, and all you simply do is get your Fibonacci retracement tool, and we're going to swing from as many swing lows up to the high as possible. So from this low all the way up to this high. Zoom in a little, we can see the stock pulled back right here. We're going to draw another Fibonacci retracement from this level all the way up to the high up here, and then we can see we got a big pullback right here. We're going to draw another one right there as well, right there. And as you can see, as it says in its name, these lines just clustered our whole chart. And what I like to look at or look for when using Fibonacci clusters is, are there many horizontal lines overlapping each other at one specific price? And as we could see right here, we got this big cluster of lines at this level right here. And what I will personally do, so I don't have all these lines clustering and staying on my chart, I'll make a note. I'll write down on either a notepad, or I'll just draw a fresh line by itself at this price level and delete all the clusters, so I don't have to keep my chart clustered with lines. And the psychology behind Fibonacci clusters, you have many different people and groups of people out there trading all types of different strategies, indicators, and many different people and groups of people using Fibonacci to trade. You have some people just drawing retracements from one level up to the high, while another person could be drawing a retracement from this low up to this high, while someone else is drawing from this low up to this high, or someone's doing a projection from this low to this high down to this low. You have many different people and groups of people using Fibonacci in their own ways. And with the clusters, you plot out from many different areas as you can to get an idea or visually see where these horizontal lines are intersecting at a specific price. Because if you have all of these lines intersecting at one price, like we do right here with this line, all of those different other people who are retracing and drawing their Fibonacci lines from many different levels, that same level is more than likely gonna be what they're watching as well, depending on how they draw the Fibonacci. And I really hope what I just explained made sense to you. If it did, type down in the comments down below, I get it. And then like I said, once I get all my levels, I'll delete all my levels, and then I'll just have that one price line measured out. But like we just read on Investopedia, also pay attention to the volume all down below right here when the stock is at that price level, all right here. You could see it ran up and slammed down. We had all of this volume, runs back up, was bouncing off of it all right here. We had all of this buying volume, was holding as support briefly. Right there, we had this big spike in volume, and then it was acting as resistance right there with all of this buying volume right there. And in other words, doing this also is just another way of using volume profile. Volume profile, volume at price, whatever you call it. It's all about paying attention to detail when doing technical analysis and looking at it as an art form. This isn't a science. It's not going to be perfect. To me, technical analysis is all about having fun, trying different techniques, paying attention to the details that the chart, the volume, the price action, and the price is trying to tell you, and putting the pieces together to tell the story. So in a way, you're like a detective. You're putting the clues together, you're finding the clues, and you're a scientist. You're testing, you're refining, you're testing again until you come up with the formula that works for you. Now let's take a look at another example, and this time on Tesla on the 10-minute time frame. And let's just imagine for a moment, and I'll draw a line on it, all of what happened over here has not happened yet. And what we're going to measure from is all of this downtrend right here. And just like we did with the previous chart, we're going to do the opposite for Tesla. The previous chart, we measured from the swing lows up to the high. Now with Tesla, we're going to swing from the lower highs down to the low, because you could see the stock was just in a wicked just downtrend all the way down, making lower lows and lower highs. So we're going to get our retracement tool, and from the high way up here, we're going to draw all the way down to this low down here. This is going to be our main low right there. And then from every high that Tesla made, we're going to measure it all the way down to this low. There, this high, all the way down, this high, all the way down, this high, all the way down, and we'll do one more from this high all the way down. Now you could see we just, like the name says, we clustered our chart with Fibonacci retracements. We see all of these lines on here, and what I want to look for are the thickest and darkest lines. I don't know how well you guys can see that, but I'm going to draw it with my drawing tool here. We have a really thick line right here, a really thick line right here. We do have a bunch of Fibonacci lines that are really close together, but I want to pay attention to the ones that are overlapping each other pretty much perfectly, making the very dark lines that I'm drawing out right here. And then I missed one. I got one more right there. So now that I've traced out all of the thick, darker lines with the clusters, I can go ahead and delete all of these. And now that we look at Tesla here, and you could see from this low, after measuring from all of these lower highs down, we have our retracements in this right side right here. You could see Tesla held as support right there, and all held as resistance right there. More resistance right there. Held as support on that line. Held all as resistance right there. Held as support right there. And then it did get over right here, but you see that I really hope you guys can see this. But there's a big death candle, a big red candle right there at that line, just sinking right through it. And then it's just holding as resistance all right there. And then also it surged right up through that resistance all the way up to right there. Came back down and played around in that area. Held as support at that line. Held as resistance as that line. You see how this stock, Tesla, pretty much confined to all of those Fibonacci clusters that I've drawn on the way down to this low, and only picking out the ones, the horizontal lines that matched perfectly, and disregarding all the other ones that were really just close together. You see how well this stock pretty much confined to those really dark levels. That's the power of Fibonacci clusters. Pretty neat, huh? Fibonacci is a really fascinating topic. When it comes to technical analysis, and me as a day trader, I love drawing with Fibonacci and using all the Fibonacci tools and trying different techniques with Fibonacci and seeing how the stars align. Fibonacci, like I've said in many of my other videos, is surrounded by us everywhere, from the lengths of us, our arms, our face, nature, Mother Nature, the ocean, space, everything. Buildings, structures, architects, math, sunflower seeds, seashells, everything. Seahorses. There's so many things that revolve around Fibonacci and the numbers, and it's all over in the stock market. Be that scientist, be that detective, put the pieces together to tell the story, test, refine, test, refine again. You're a scientist and a detective, and have fun with this. This is what it's all about. All right, we're going to go over one more example here. We're going to take a look at GDX, gold, on the 30-minute time frame. And when it comes to doing technical analysis and using Fibonacci, you're going to see Fibonacci work very well with indexes and ETFs. This is GDX, a gold ETFs. And what I want to point out real quick, and this doesn't relate to Fibonacci, is look at that big selling bar right there and that big wick on GDX. That is a bullish indicator that the stock is in a strong reversal and bullish. The bears could not hold it down with all of that selling pressure. Bulls came in and ripped it all the way up from $17 all the way up to $25. Nice little $8 push to the upside right there. And then when it came back down, same thing. Another big volume selling. Not as big as this one, but we have our long bottom wick right there, and the stock pops right back up to the level it popped up right there. Just noticing little details like that is going to separate you from the sheep, and it is a perfect example of what I always say in my videos. Pay attention to detail. If you pay attention to detail, you're going to put the story and the pieces together, and you could capitalize on that. And that's what technical analysis is all about. But back to our Fibonacci analysis in our last example here on gold, GDX. Let's say we spotted that reversal right there, and now we want to measure with Fibonacci key price levels that the stock could find resistance at or bounce off of as support. Again, just like the other stock Tesla, I'm going to draw a line right here dividing the chart. Let's pretend that none of this right here has happened yet. All that has happened is this right here, and we're spotting this bullish reversal right here with this selling pressure and this bottom lower wick. We go ahead, we get out our Fibonacci retracement, and we're going to measure from the highs all the way down to this low. Starting from there, move to the next high right there, all the way down to the low. From this high all the way down to the low, and then one more. We're going to draw from this high down to the low. Now remember, what we want to look for are the thick, dark, horizontal lines. I don't really care too much about the lines that are really just close together and clustered close. I want those thick, big, dark lines. That's what I want to look for. We'll go ahead and draw them out. I don't know how well you guys can see this on your end. Leave down in the comments if you can see it and you are enjoying this video. It will let me know you are liking the content I'm putting out. And don't forget to hit that like button, smash that like button, pump that YouTube algorithm. And if you haven't subscribed already, you're missing out on so much golden content from the videos I put out. Don't be shy. Join the Trading Learning 101 community, where we all grow as traders and investors. Alright, so let's draw out these thick, dark lines that I have on the chart. I see one right here, I see another one right here, and I see one right here. And there's a bunch of them that are clustered up right here. Like, it's on the verge of being a thick line where they're all matching up at the price levels. So I'll draw that one as well. Now that we drew our lines, we can go ahead and we could delete all of these clusters that we've drawn. And now we can just look at the chart with the lines that we've drawn from all of those Fibonacci clusters. And if you're looking at this, it matches up pretty darn well, I must say. From all of those retracements, it found resistance right there, resistance right there, right there. Well, you can say, well, Dave, it did a gap fill. It filled up this gap from right here. Yeah, you could say that. And you can also use that in your technical analysis. That's what it's all about. The more you know, the better. So study, 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 study. The more you study right now, especially if you're just starting out, study your butt off. Study till you can't keep your eyes open. Dedicate yourself to this. Make sacrifice. Stay in. Study all night. Do what you got to do during the day. Your work, your job, school. At night, study your butt off. Over the course of your career, your trading career, the longer you go into it, everything that you've studied will just start to make sense and fall into place. Trust me on that. Trust me. But back to this. At this line, found resistance. It found support all right here. And even that bottom line right here where I said I'll add it because the lines were really close to making a big thick line. Look at it, pinpointed it or pinpricked it right there. Stock came all the way back up, found resistance there, found resistance all right there, more resistance, even holding as support all right there, and running up almost to this line up here, coming back down, holding as support at around that line, resistance, resistance, support, support, pushing up through it right there, and just sitting at it all right here. Look at that. That's beautiful. And that's Fibonacci at its finest right there. Looking at it as an art form and not a science, Fibonacci does wonders, everybody. And this is why I use Fibonacci every day as a day trader. Don't knock it till you try it. And Fibonacci is fun. There's just so many different ways you can use Fibonacci. You can run into people out there that will complain and critique. That's not the way you use Fibonacci. You can use Fibonacci any way you want. Remember, it's an art form. Yes, there are certain ways you're supposed to use Fibonacci, but just have fun with it. Remember, it's your trading journey. It's not their trading journey. But yeah, you want to do what everybody else is doing. I get that. But the main thing with Fibonacci to remember is you're just swinging from lows to highs and highs to lows. That's all Fibonacci really is. And we didn't even get into the time sequence of Fibonacci. I'll make that for another video, but for now, we got Fibonacci clusters. You guys probably, and I hope, learned something new. I hope you guys enjoyed this video. If you did, hit that thumbs up, leave a comment down below, tell me what you think of Fibonacci clusters, my presentation of Fibonacci clusters to you all. And like I've mentioned earlier, you'll see Fibonacci work really well with indexes and ETFs, because you got to think of the psychology when it comes to the indexes and ETFs. There's more people around the whole world paying attention to the major indexes like the S&P 500, NASDAQ, gold, gas, oil, compared to an individual stock like GM, Ford, Apple, Facebook. Yeah, those are popular stocks and a lot of people will be watching those, but the whole world is watching indexes and ETFs. Psychology is a big factor in the stock market, and I highly recommend learning and studying a lot on psychology and emotions. This is why patterns always work in the stock market, because human nature never changes. Never. And also why the great book by Jesse Livermore, Reminiscence of a Stock Operator, that book is over 100 years old and still holds up today, all because human nature never changes. But that's going to wrap it up for this video, everybody. I hope you enjoyed it. Once again, be sure to check out the Fibonacci playlist. I will be adding more videos to that playlist in the future. Be safe out there, everybody. Study your butt off. Make sacrifice to better yourself in the future. Till next time, everybody, have that patience, have that discipline, and study, study, study. Later, everybody.
The most valuable commodity I know of is information. Wouldn't you agree?